Okay, now we'll work on whether or not to replace equipment. And what happens is that just the usefulness of an asset, um, it might require more maintenance than it used to, and there might be something better that's out, so you've got to decide whether to keep the old one or get new equipment. And a differential analysis is used to figure out that decision, okay, whether or not to replace fixed assets, like equipment and machinery. Okay, so one of the things they point out here is that the analysis focuses on the costs of continuing to keep the old versus replacing the equipment with something new. And the book value of the equipment, what you paid for it, depreciation, and everything is a sunk cost and is irrelevant. Even though they're really tempting numbers to use, you don't want to use them. So here, now we're on November 28th of the current year. A business is considering replacing an old machine with a new machine. So it has a book value of $100,000, just doesn't matter. But the estimated annual variable manufacturing cost, $225,000 a year. We could sell it for $25,000 now, and it's got an estimated remaining useful life of 5 years. All of this is relevant. Okay, all of this matters. Now, if we buy a new machine is going to cost us $250,000. But look at the estimated annual variable manufacturing costs go from $225,000 to $150,000. Okay, that's a really big difference. An estimated residual value of 0, in other words, at the end of its life, it won't be worth anything, and the estimated useful life is 5 years. Okay, so here's our decision. Here's the old machine. The variable manufacturing costs are $225,000 a year for 5 years, or $1,125,000. Okay, so if we keep the old machine, that's what it's going to cost us. Now let's say we buy the new one. First of all, we sell the old machine, so $25,000 is coming in. Then we pay $250,000 for the new machine, $250,000, and then the new variable manufacturing costs are $150,000 a year times 5 years, or $750,000, which brings us to $1 million in total costs, $975,000 net out. So in terms of the differential effect, a $150,000 difference between continuing with the old one and replacing it with a new one. Okay, so let's do one more of these. Well, we got a couple things here. This is the revenue that's foregone from an alternative use of an asset such as cash is called the opportunity cost. It's actually the second best alternative of what you could do. Okay, so although the opportunity cost is not recorded in accounting records for sure, it's still useful in analyzing alternative courses of action. Okay, so we can keep the machine or we could replace it. Okay, that's the opportunity. So here's an example exercise. We got a machine with a book value of $32,000 and it's an estimated 4-year life. And a proposal is offered to sell the old machine for $10,000 and replace it with a new one that costs $45,000. The new machine has a 4-year life with no residual value. The new machine would reduce annual direct labor costs, okay, from $33,000 to $22,000, so that's a big savings. Prepare a differential analysis dated October 7th. I don't know where they get these dates from, on whether to continue with the old machine or replace it with a new one. That I can understand. Okay, so here's our machine. This is continuing with the old machine. Direct labor for 4 years is $33,000 a year for 4 years, or $132,000 out. Okay, so there's our total cost. And there's our total cost for the old machine is $132,000. Now, if we buy the new one, the first thing that we get is we get to sell the old one and get $10,000 for it. Then we've got to pay $45,000 for the new machine, and then the maintenance or the direct labor costs for it for 4 years are $22,000 for 4 years, or $88,000. So the net cash outflow from replacing it is $123,000. Which is a $9,000 savings. Okay, I just put the assumptions down here again in case we needed it. All right, but you've got a big savings in direct labor, and that is what really drove the decision. Okay, sure these are starting to run together for you by now. Okay, the next thing that we're going to look at is whether to sell a product or process it further. And something you can think about something like milk. Okay, do you sell it as milk or do you process it further and sell butter?